Good afternoon and welcome to NYFP. In midday trade on this Monday afternoon, we are seeing the major U.S. stock averages come off earlier lows. Joining me now is Peter Cardillo of Rockwell Global Capital. Peter, good afternoon. Thanks for joining me.
Nice to be back.
Well, it looks as though U.S. equity averages are turning around. The Nasdaq and S&P 500 are slightly above the flat line in midday trade. We got that better than expected U.S. retail sales number, and business inventories here in the U.S. were unchanged. But given what we're seeing in the equity markets, what do you expect for the rest of the session?
Well, to begin with, yes, the retail sales were better than expected if you figure in the revisions. Obviously, we had 2 months of strong revisions, so basically they did come in somewhat better than expected. But still, nevertheless, they point to a cautious consumer, and we're probably going to see that in the consumer spending report. Nevertheless, you know, the market today is pulled back a little bit after Friday's record highs, and I think that there were two reasons for that. One, we had a stronger dollar in the morning, and then, of course, also, you know, again, we're seeing lots of talk about perhaps the Fed's plan to exit the early stimulants, you know, was somewhat pointed out aggressively in the Wall Street Journal today. So I think there were two factors that gave traders a bit of an excuse to take some money off the table at the opening this morning. But, you know, it's a possibility that we close flat or maybe even slightly higher.
And Peter, you bring up a lot of important points. We've been seeing mixed trading action for the U.S. dollar. We did see more strength earlier today, but the dollar has come off earlier highs. Also, the G7 did not say anything about the BOJ's monetary policy, and as a result, we did see that 102 level break overnight as well as earlier in the New York session. But I do want to get your take on China's economic data releases. We saw mixed industrial production as well as retail sales figures, but if we saw those growth numbers anywhere else in the world, that would be great. So what did you make of that data?
Well, you know, the data that came out of China was somewhat mixed, and of course, you know, as far as the G7 is concerned, they basically gave the green light to Japan to continue, and I suspect that we're probably going to see the dollar-yen cross trade perhaps tick up to around 104, 105, and that could bring in some pressures in the equity markets here. But nevertheless, you know, it's week of a lot of economic data. We'll be looking at two Fed forecast, that is the Philadelphia Fed and the Empire State, and of course we have consumer sentiment, we have inflation data, housing data, and so I kind of suspect that most of that is going to point to mixed economic activity, and you know, that sort of negates, I think, a lot of the worries in terms of an early exit of stimulants, although I guess the real factor in terms of economic activity will be the unemployment report next month. If that should be a strong number, which I don't think it will be, but if we should see the economy create over 200,000 new jobs, then you can rest assured that the debate of an early exit is going to have an effect and will probably keep stock prices in check.
Okay, Peter. Well, indeed, we have a lot of economic data to go through this week, so by the time we meet again on Friday, we'll know more about the U.S. economy. So I look forward to speaking to you then and getting your insight. Thank you very much.
Thank you.